All right. Well, good afternoon, everybody. And wow, what a day it's been. I was listening to the last two presenters, very interested. Um, the last presenters from Montreal. I don't know if he's still listening, but I was just in Montreal back in November, right before it got cold. So Montreal is a very, very cool city. I really enjoyed my time over there. So it's kind of cool. I didn't know that you were in Montreal. I probably would have stopped by and say, "Hey, what's going on?" Another fellow trader over there. But yeah, thank you for that. Um, Today I want to talk about how we can learn to decode the market using just candlesticks. Okay, I know candlesticks is nothing new. There's lots of information out there. Unfortunately, there's a lot of, I don't want to say misleading, but a lot of information that doesn't really help you see what you need to see. Okay, and I always tell people like if there's one thing that you need to learn is understanding candlesticks, because candlesticks can really help you tell the narrative of what's really going on. And I'm going to show you that today, how you can use candlesticks to tell you the narrative. People who know me know that I don't pay attention to the news. And a good reason why I do not pay attention to the news is because I understand how to read candlesticks. I would rather try to rely on the candlestick signals to tell me what's going on than trying to figure out what the news is saying. Okay. And if you get to the point where you really start trusting your analysis of candlesticks, it really gets you to a place where not only you really, really successful in what you do as far as trading, but it gives you peace of mind. All right. Because again, yesterday was a great example of just how, when the market dropped and everything, I'll be honest, because I don't listen to the news, so it could just be me. So don't judge me for this, please. But because I don't listen to the news, yesterday was the first time I ever heard of the word deep seek. Okay. Literally, yesterday evening was the first time I ever heard about the word deep seek. Now, I don't know how many people have heard about that before, but this is not the first time that I've seen market react a certain kind of way. And then the media goes out there and try to find information to tell us, here's what's going on. Wouldn't it be cool if we could have seen the warning signs before those things happen? Right? And I'll show you how, again, even before this drop and how NVIDIA got affected so badly, the warning signs were there. We were actually warning people about NVIDIA back on January 15th. So that's almost 2 weeks ago. We were warning people, say, hey, something is not right with NVIDIA. You want to take precaution, so to speak. I even posted it on my social media page and said, something is not right with NVIDIA. So so yesterday now, when the news comes out and they said it's DeepSeek, which again, I've never heard of that in my life. I was like, well, I'm not surprised. They could have called it, shallow waters is what it was. It wouldn't matter to me because again, we had seen the warning signs literally 2 weeks ago and quite frankly, way before that. Okay. So when I thought about what to do here today, I said, you know what? People need to understand candlesticks is not something to just glaze over or just say, hey, I know about it. And unfortunately, like I said, there's a lot of information that's not really showing you what you really, really need to know about candlesticks. And so that's what we're going to try to do today, okay? And see where that takes us. All right. So let's begin. First and foremost, here's our risk disclosure statement. We're not licensed financial advisor, nor I am not, but I can share what I do know, and hopefully you use this to kind of help you with your knowledge, but it's not a recommendation to buy, sell, or hold anything. Our research has shown that any major reversal signal usually begins with what we consider to be a primary candlestick signal. So what we've researched, if anybody's ever studied candlestick signals, you'll know that there's hundreds of candlestick signals out there. What we found is that there are certain candlestick signals that appears over and over and over more frequently than all the others. Okay. And so we decided to call that primary candlestick signals because they are the ones that literally repeat over and over and over and over. So much so to the point that, again, I remember Steve Nissen was, the grandfather of candlesticks is what they say. He brought that from the Japanese and brought it over to the United States or to the Western world. And a lot of people learn from that and all that kind of stuff. And there's a lot, like I said, over 100 candlestick signals out there. I remember studying that and wanting to master all 100 candlesticks out there. But as I started mastering those, I started realizing a lot of them were not appearing on the charts that I was looking at. It's like, okay, so we have all this, but it's not showing up. It's not showing up. And then Steve Bigelow, if anybody knows who that guy is, Stephen Bigelow, may his soul rest in peace. He then, helped me because he narrowed it down initially to 24 different candlesticks. I was like, okay, that makes sense. And he was like, here's 24 different candlesticks that typically helps you see what's going on in the market. And I was like, okay, good. That's better than trying to master 100 and something. Then he narrowed it down to 18. Then he narrowed it down to 12. And I was like, okay, that's even better. And so as he was doing that, I was like, okay, what are the ones that I'm noticing based on what I'm doing my research on? And I realized that, even less than the 12, there were really only 7 that you needed to pay attention to. And out of those 7, 5 of them were so reoccurring. And I was like, you know what? I don't even need to pay attention to anything else but these 5. And so that's why we call them the primary candlestick signals. Then we also noticed that there are 2 others that would show up where, again, what the unique thing about that was, and this is what we mean by the secondary candlestick signals, is that they would show up right before a primary candlestick signal appears. Does that make sense? And so I was like, wow, that's kind of interesting to see this phenomena, this repeatable pattern of these 2 typically, when they show up, it's usually followed by another one of those 5 primary candlestick signals. So I was like, wow. So in all, if all I got to master is 7 different candlesticks, I can now learn how to use this to narrate what is going on and interpret what is going on with a stock. And this is what we've been using to call bottoms and tops over and over and over again. We use this to see warning signs. We see crashes about to happen ahead of time, and so on and so much. So much so that in the event like something like yesterday happened where, um, market just drops all of a sudden, and there was no candlestick signals that could have warned us about that. The only exception being earnings. Okay, so if earnings comes out and stuff like that, or and really that's it. And when I mean even earnings, I'm just talking about individual stock. But on the major market, like when we have the S&P 500, if it ever drops without any warning sign, 9 times out of 10, what's going to happen is that you'll see the market recover. So last night when I was with my subscribers and doing our webinars, I told them all, I said, look, because there was no real warning sign on the major market, the S&P 5, now there were warning signs on the NASDAQ. So please understand that. But as far as the S&P 500 and the Dow and the Russell, there was no major candlestick signal saying that we should be expecting a pullback or a drop. And I said, so in the event that the major market has no warnings, if it does drop, give it a day, give it a week, it will bounce back. Okay. And that's just the nature of the market. So this is part of the research that we've done and seen it. So when the market dropped big yesterday and I looked, I said, okay, did I miss any major signals that said the market was going to drop? It's like, nope, didn't miss anything. Okay, no worries. It's going to bounce back. That alone can help you a lot with just understanding how to stay on the right side of the market, and which is why we call our company right side trading. Okay. And so once you understand this, then any other candlesticks outside of those 7, we consider that to be auxiliary candlesticks, meaning that, you know what, if you want to pay attention to it, you could, nothing wrong with it. But quite frankly, you don't really need it, so to speak, because even if any of those auxiliary candlesticks appears, chances are it will be followed by a primary candlestick signal. Okay. So it's like, then why pay attention to your auxiliary when the market or the stock is not going to move based on any other candlesticks until one of these primary candlesticks appears? And so once you understand that, then the next thing is that a lot of these candlesticks have different interpretations, which is what a lot of people don't know, and which is what you probably won't find so much about on the internet. Once you understand what each one of these candlesticks, the interpretation of it and what is communicating, then I kid you not, you can literally, without the need of any expert, if you understand it, you wouldn't even need me to tell you what's about to happen in the market or a particular stock. You can learn how to decipher this and decode this on your own just by understanding what each and every one of these candlesticks are telling you. And this is why I say understanding candlesticks is huge. So let me start with just one out of those 7. Does anybody know what this candlestick signal is. Does anybody know? Just give me a Y if you know it, or type in the name if you know it. If you don't know what it is, just give me an N. That way I know that people are still with me as well. Anybody? I'd appreciate that. Just make sure that people are still with me. Okay. Thank you. I appreciate that. Thank you, Marcia. Thank you, Idril. Good. Okay, so you don't know. All right. So this is something called the bottoms up. Now, I came up with this name simply because at the time when I was doing my research and I started noticing this particular candlestick, I didn't know what it was called. And so a good buddy of mine was like, look, if you can't find any information about it, why don't you just give it a name and come up with your own criteria around it? And I was like, okay, that sounds good. I'll do that. And the reason why I called it bottoms up is because it's usually literally almost the last candle at the bottom before stock starts rallying higher. Does that make sense? Chances are whenever a bottoms up candlestick appears, market would not go lower than that level. And so part of the narrative and the information we garner out of the fact that we see a bottoms up is like, oh my goodness, we put in a bottom. The bottom has been set. And so if you understand that, then it's like, bingo, I now know what to do. I can prepare for what's about to come. Okay. And that's what a bottoms up is. So let me show you the guidelines that I put around this. And again, this is just my guidelines based on my studies. Okay. A bottoms up candlestick signal is one of those primary candlesticks. Okay. It has to be a two candlestick formation, meaning that we have to have a red candle and a green candle, as you see right there. The red has to always be on the left-hand side with the green on the right. Number 3, the top of the green must be below the top of the red. Number 4, the bottom of the green must be below the bottom of the red candle. Number 5, you ignore all wicks, tails, and shadows. So if you know what a wick and tail and shadow is, you ignore all that. And the reason why we ignore that is because when you are talking about, there's a candlestick that looks very similar to this called a piercing candle. Piercing candles, you have to include the wicks and all that stuff. So it makes it a little bit different. And so you won't see it as consistently powerful as the bottoms up is, right? But a piercing candle, I consider that to be one of those auxiliary candlestick signals, because again, even with a piercing candle, you still have a bottoms up as well. Number 6, once you identify a bottoms up candlestick signal, and usually this appears after the stock has been dropping. So you don't want to look for bottoms up when the market is rallying higher. Does that make sense? You want to be looking for bottoms up when the market is dropping. Number 6 is after you've seen a stock drop for quite some time, and then you see the appearance of a bottoms up candlestick signal, one of the first things you want to do is draw a horizontal line at the top of the red candle. Again, you ignore all the wicks, just the body, all right? And that's what you see. See if I can bring my highlighter up here. That's what you see. Where is my highlighter? Give me a second. Sorry about that. I thought I had it up. That's what you see with this line up here, right? So you would draw a horizontal line over there. And then number 7, what ends up happening is you say, if we have a confirmation, what we need is a candle, a green candle that closes above this horizontal line within the next 5 candles. So even though it says wait for the next 5 candles, wait for a confirmation candle within the next 5 candles. So it could happen the very next candle. It could happen 2 candles later. The idea here, though, is that it needs to be a green candle, because like you see number 8 over here, it tells us never buy if the confirmation candle is a red candle. So even if it closes above this level, but it's a red candle, you hold off on buying, okay? There's something wrong with that, right? Now, like I said, every candlestick communicates something different. And in this case, the bottoms up has this unique quality of letting traders and investors know that the bottoms of a bearish trend has been established. Every time I see this after a bearish drop, it's like ding, 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 ding. I know the market is getting ready to go higher. Okay. That being said, here is an excerpt of what we posted on our social media. You see right here, this is back on January 15th. Now, on January 15th, we were doing a webinar that Monday prior to that. I think January 15th was like on a Wednesday. But we did our webinar, and you can see, and I'll show you the chart a little bit better. This right here was the S&P 500. that was already dropping. It had been dropping since December. And then we had this. Now, this is why in that excerpt we said on our Monday night webinar, we showcased the power of candlestick analysis, right? There were two powerful candlestick signals that signaled the market was poised for a turnaround. Now, this is what it looked like when that happened. So this is what we saw that Monday night when we were having our live webinar. Monday comes and you can see if you go through the guidelines that I give, it has to be two candles, one red, one green. The red on the left, the green on the right. The top of the green must be below the top of the red. The bottom of the green must be below the bottom of the red. Ignore all the wicks. Draw a horizontal line at the top of the red candle. Make sure we have a green candle that closes above that top. And if it's a red candle, you do nothing. But the most important thing here was the fact that we now identified a bottoms up after the market has been dropping since December 9th. Over a month, the market has struggled to go higher. All of a sudden, we see this pattern, okay? And this is what I mean by a technical signal has confirmed that the S&P has reached the bottom of its recent downtrend. This suggests that the selling pressure has subsided, paving the way for a potential turnaround, a rebound. Knowing that information, and this is why on that night when we were doing this, it's like, hey guys, market's getting ready to go higher. Now we just have to wait for step number 6, 7, and 8. If we get 6, 7, and 8 to come through, we should be buying. Nobody should be sitting on the sidelines. Nobody should be wondering. There's no guessing. There's no hoping. There's no wishing. This is data. All right, this is data. And again, anybody can learn how to do this. The very next day, we get this candlestick, which is another bullish candlestick signal. Some people call it the hammer. All right. This is what we consider one of the secondary candlestick signals. And so going, the first day right here, this is all the information we had. So we knew that, hey, signals have confirmed that we've reached the bottom, all right? And there's a potential for the market to start heading higher. The selling pressure that we've been seeing for almost a month has subsided. Market is getting ready for a rebound. The very next day, this is on the daily time frame. And again, by the way, for anybody who might be asking this works on any time frame, just so you know. The very next day comes, and then we have to add more information to the original information. That's what you see here in red. The index has found a solid support level, reassuring traders and investors that the current price zone is acting as a base. This development is a key indication that downside risk is now limited, which is what the selling, this right here, we actually don't call it the hammer, we call it a buying pressure. And I like that word better, simply because you'll see that, prices were going down and went all the way down over here, and then buying came back in and pushed it back up. So we call this buying pressure because this lets us know, hey, there's a reason why they buying all this stuff. And when this happens, typically what we find is that price typically establishes a very solid support level. So when you combine the fact that, hey, the market just communicated that we've established the bottom, which is down here, and the very next day, it confirms that a solid level has been put in, which is here. And this is where it's like, even though, and this is what we mean by right side trading, because right now we have to then anticipate what's going to happen on the right-hand side, right? We're taking the information we see currently and trying to determine what is going to happen going forward. And right now, based on that information, risk is limited. So, and when I say limited, it doesn't mean that risk is completely gone away, but it's like, it's limited, meaning that we've reduced the risk of it going further down. We have now got more information that suggests buying has taken place. Get ready for this rebound to go higher, okay? And this is what I mean. So at this point, this is what I tell people, and unfortunately, a lot of people try not to, people have a hard time with this aspect that I'm about to show you right now. And that is, when I say I don't need the news, I honestly have no idea what happened on this day, nor do I know what happened on that day. All right, based on the news, what caused the market to drop and make it go back up? I wasn't paying attention to any of that. But one thing I did know was that, wait a second, we put in a bottom, and then now we're confirming this bottom with a solid support level. which, by the way, I saw somebody ask a question earlier when Marina was asking the question versus that, is there a difference between supply and demand as opposed to support and resistance? In my opinion, there's really no difference, okay? It's just lingo. Does that make sense? I know that there were some people way back in the day that was trying to claim that, supply and demands are different from, support and resistance. In all my studies, and this is me, again, don't judge me, please. I'm just telling you my honest opinion from what I've seen. I haven't really seen that much of a difference, when it's happening, if it's support, it's support. If it's resistance, it's resistance. It's supply and demand, it's supply and demand. It's the same thing to me, okay? But this now tells me we have a strong, whether you want to call it, support or demand zone. But the fact of the matter is, I now know, and I call this a zone because when I take the first candle and the second candle, I know that price should not go below this level. Or let me rephrase that, price should not close below that level. Does that make sense? So thank you, Timmy. Tim said, look, supply and demand creates support and resistance. Pretty simple. I appreciate that. I actually like that. I never looked at it that way, but that makes sense. Supply and demand creates support and resistance. Okay, so so when people are like, oh, is there a difference between the two? It's like, I mean, even like what Tim is saying right now, it's like it sounds to me like it's pretty much be the same thing. Does that make sense? So it can't be any other way. I totally agree. All right. So in this case, my expectation now is, oh, wow, ready for the market to go higher. And as you can see right here, this is where we are today. This is today. This is what we were analyzing, right? And this is what I mean. Even though we did not know, and we don't have a crystal ball, right? Nobody knew what was going to happen. Everybody's out, it's a guess. What could happen here? The one thing I do know is that this unique technical signal has confirmed that the S&P has put in the bottom. Okay? This suggests that selling pressure has subsided. It is paving the way for a potential rebound. Why potential? Because we need to see more information. And sometimes it could take 3-4 days before we see the reversal taking place. The index has found a solid support. It's reassuring us traders and investors that, look, this current price zone is acting as a base. This development is a key indication that the downside risk is limited and we should be expecting price to go higher. When price started heading higher, right? When price started heading higher, you think we were surprised by this? No. We were already prepared for something like this to take place before it even began. Marcia is asking, does this work on all-time minute charts? Yes, any time frame, quite frankly, any time frame. I think like Marina said earlier, was it Marina that said, no, I think it was, I keep on forgetting the guy's name from Montreal that spoke just before me. He said, the higher the time frame, the better the results. And I totally 100%, I almost wanted to shout it and say, yes, thank you, somebody who understands. So the higher the time frame, obviously, the better. But you can see this on any time frame. Does that make sense? One of the things I encourage people who do smaller time frames is like still try to look at the daily chart, the weekly chart, the monthly chart, because it gives you a bigger picture. Because here's the thing: once I see this on Daniel, thank you so much, David. Daniel, once I see this and I notice that this is happening on the daily time frame, what does that tell me, Marcia? This tells me, wait a second, this market has the potential to go higher over the next few days. Does that make sense? And so if that's the case, then for my trading, if I was to be trading the smaller time frame, the minute chart, the 5-minute chart, I will be looking for opportunities to go bullish as opposed to be prepared to go bearish. Does that make sense? And that's kind of like a good way to kind of look at this, is once you know what's going on a bigger time frame, hopefully it can help you set your mind on the right trajectory or the right side of the market going forward. And when the market then hit new all-time highs, I wasn't surprised about that. I wasn't surprised about that at all. But now we can come up with a narrative. A unique technical signal has confirmed. Again, it wasn't because I know what the news was or anything like that, but a unique technical signal confirmed that the S&P had hit bottom. Lo and behold, that was the bottom. Okay, this suggests that selling pressure has subsided. It's paving the way for a potential rebound. Index has found huge support, right? And so this is a key development that the risk to the downside is limited. So now with the support level being established, what traders should watch for is the appearance of bullish primary candlestick signals. This formation would confirm upward movement and signal the beginning of a potential rally, which is exactly what we had. You've actually had it down here, but again, by the time this happened, if you were not buying, it's simply because you do not understand or trust candlestick analysis. Okay, notice that we had no indicators on this. This is just simply understanding how to read. And if you're wondering, well, but what about the times it did not work? It's because, again, there's a lot of misinformation out there about candlesticks. There's a lot of information that is not really even out there that should be out there that could tell you what's going on. Once you understand this, I kid you not, you can write your own article. You can write your own narrative. And I'm not saying writing your own because you have a hunch. You write in it because you see what the data is telling you. Does that make sense? Let me give you another one. So this is what I ended up writing. So again, you can become your own author and own article writer. In a nutshell, this is kind of like based on that information. This is what I end up writing. The S&P is showing signs of stabilizing after a recent bearish trend, with technical indicators pointing to a potential bullish reversal. And then this is all the stuff that we talked about earlier, right? So that's there. And then it says, as these technical patterns align, the S&P 500 appears to be transitioning from a bearish phase to a more bullish outlook. Market participants are encouraged to monitor upcoming candlesticks activity very closely, as it could provide further confirmation of the index next move. This development offers a sense of optimism for traders and investors, hinting that a possible recovery in the broad market is about to take place. I didn't need the media to tell me this, nor do I need to know what the media is saying. It's just simply using candlesticks. And so this is why I always tell people, based on that information, this is what ended up happening to the market. Yes, we had these 2 days right here, which is yesterday and today. Okay, this is yesterday, this is today. But based on that information that we had back over here, interesting how the market planned out. Coincidence? No. It's learning how to understand and read data. Okay, so here's some more examples of bottoms up. And again, this was during the COVID situation. If you guys recall when COVID happened, this was the bottoms up in April of 2020. You have to understand, April of 2020, I shouldn't say nobody. Most people were not thinking the market was going to go higher. If anything, everything you heard on the media and everywhere else was that we're heading for the greatest recession since the Great Depression, right? And everybody was focusing on debt tolls, how many people were infected by COVID, what was going on, how many unemployment rates was going on, blah, 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 what's the GDP looking like? When candlesticks were telling us, oh, we hit bottom, I won't lie to you, even when I saw that bottom, because the whole world literally had shut down. I'm talking about the whole world was shut down, right? Even I at that time was like, I don't know about this time around. It's like, because everything was unprecedented at that time. So I'm like, yeah, I like candlesticks, but maybe I don't think I should trust candlesticks this time around, because this is different. This time is different. How many people ever heard that? This time is different. This time is different. I say, yeah, this time is different. I shouldn't do it. But then I kept on watching it go higher. I say, you know what? Nah, I think I need to jump into this thing. Next thing you know, market rallied. So I was grateful that I saw that. And even though I had my skepticism initially, I quickly changed that because I said, you know what? Just trust what the candlestick tells you. The trade war that Trump had in 2018, same thing. Massive drop from October to December. Bottoms up signal right there. Next thing you know, market reverses back higher. This was literally the day after Christmas. 2008 financial crisis. Most people don't know. Hey, nobody could have told you that the market bottomed in March of 2009. I beg to differ. Why? Guess what showed up on that monthly time frame in March of 2009? A bottoms out candlestick signal. Okay, so to tell me that candlestick signal, and again, you can look back here, and I could ask anybody, what was the major news in March of 2009? They won't be able to tell you today. But I can tell you this, that we had a bottoms out candlestick signal, which means that when we have bottoms out candlestick signal, we expect it to bottom out. Now, bottoming out doesn't necessarily mean it's going to shoot straight up and go to all-time highs. What it's basically telling us is like price should not go below that level. And if price should not go below that level, Warren Buffett said it best. He said, look, when you find a stock that's at the bottom, you buy as much as you can and then sit back and see what happens. Again, it doesn't guarantee, because like I said, every candlestick has a different interpretation. The only interpretation that a bottoms out gives you is that we've established the bottom. Okay. So could we have established a bottom and the stock just goes sideways? That's possible, which is why you need to understand what all the candlestick techniques that tells you that, hey, are we going higher? Are we going sideways? Should we expect new all-time highs? Should we not? All that kind of stuff is important. And I'm telling you, the data is there. Okay. It happens over and over and over, regardless of what they say in the media, it's there. You just need to understand how to do it. Tim is saying candlestick signals are important in context. That's the key. The framing of the condition has to be there. I would agree with you to a certain extent, but yes, again, it's really just understanding what these candlestick signals are communicating. And like you said, maybe the reason why I say I agree with you to the context is, again, like I said, if you see it bottoms up after a huge rally, right? And I won't necessarily consider that the same thing. Does that make sense? So like, let's say this was going up. I'm trying to see if I can see any bottoms up over here. But let's say I saw bottoms up here. I was like, no, it's not going to be as effective as I've seen a huge drop. And again, this is where you're seeing a huge drop, a prolonged downtrend, and then out of nowhere, you see this happen. Yeah, at that point, yes, I'm willing to pay more attention to that. But if we're talking about just 1 or 2 days of a drop or 1 or 2 candles of a drop, and then you see it, it's like, okay, maybe I might have to question that one. But without a question, the more prolonged it is, and then it appears, oh man, okay, that's something that you definitely want to pay attention to. Very good. So good point, Tim. So Tim is saying, look, that's the point. The candlesticks that you are talking about won't be something to lean on as heavily after a rally. Absolutely. 100%. Thank you for saying that. Okay. But again, this is where we have to understand the other. And now this one I'm talking about is just a bottoms up. Okay. Now remember, there's 7 of them, and we can use them for different scenarios that takes place in the market. Right now, for the context of today, it's just talking about, look, because a lot of time people don't understand when we hit the bottom, right? A lot of people like to talk about stocks after they've reached new all-time highs, but like even yesterday when the market dropped, I was like, oh, start buying. I said, well, rather than start buying, why don't we wait until we see it hit bottom? Okay. And it's like, oh, nobody can really pinpoint the bottom. There's ways to identify when the stock has hit bottom, and this is one of those ways. So you're absolutely 100%, Tim, correct. If we are looking for this kind of candlestick signal in a rally, nah, you've already missed the boat. You're supposed to find this before the rally begins. Does that make sense? And that's the idea here. So thank you so much for sharing that. I appreciate that. All right. Here's some other examples of other stocks that did the same thing too. PayPal was dropping pretty big. Bottoms up appeared. Stock went higher. eBay did the same thing, and so on and so forth. The second candlestick signal that I want to share with you guys today, and then we'll wrap things up, again, is something called the buying pressure. Again, a lot of people call this a hammer. I like calling it the buying pressure simply because, again, it helps me narrate what's going on. Sellers were selling, it went all the way down, and then it came back up. And in this case, this is a secondary candlestick signal, and we don't necessarily need it to be green or red. It could be any color, right? And so that's why I put both colors on here. The idea behind this is the fact that price went all the way down to this level. Price went all the way down to this level. And then price rallied back up to this level. And in this case, price rallied all the way back up to this level. Okay. Again, kind of like saying what Tim said. In context, we have to understand, where are these appearing? Okay. Because if it's buying pressure, I want to see this buying pressure after, again, another prolonged downtrend. Market has been dropping like crazy now. All of a sudden, we see it. And I say, wait a second, why is there a lot of buying taking place? That's huge to see. So on January 21st, again, on one of my Monday nights webinar, we saw this on Apple. Okay, this is like literally last week, ladies and gentlemen. So last week, Monday, we see this on Apple. And I say, hey, Apple's is beginning to show signs of a reversal. Apple is poised for a strong rally. How could I see that Apple was poised for a strong rally prior to it actually happening? Okay. Now, part of that was because of this big old gap that Apple had as it was going down. So you can see Apple already had a prolonged downtrend. It started at $260, and then it came all the way close to 220. But the key here was that, Apple had been dropping because, we had these same buying pressure take place over here, but then it failed, right? But when this particular situation happened, this became something of very huge interest to me. And this reason why I mentioned this and I talked about this, and I was like, hey guys, you got to pay attention to Apple, because this ended up happening where after a prolonged downtrend, we had a gap that took place, a gap down even further. Now, we call this the vulture gap. That's what I call this, the vulture gap. And the reason why I call this the vulture gap, and by the way, you can go on YouTube, just type in the word vulture gap, type in my name, Wally Olopade, vulture gap. You'll see videos that I talked about this. I was talking about this like 7, 8, 9 years ago. Okay. The idea behind this vulture gap is the fact that it's really called an exhaustion gap for those who want to be, find the real terminologies. I just like to use my own terminologies because it helps me make sense, I call this a vulture gap simply because when stocks are dropping like this, almost nobody wants to deal with them. Okay. Even the people say, hey, buy the dip, buy the dip. They just buy the dip with the hope that dollar cost averaging will take it back around. I don't believe in dollar cost averaging because I understand how to read charts. And I say, look, learn how to read the charts and you don't have to dollar cost average ever again. You can just simply wait until you see the bottom and then you start buying. Does that make sense? So now Apple is dropping. It has this big gap. It becomes major news that day. I said, no problem. I see this. I'm like, oh, that is a vulture gap. And not only that, but it also has a buying pressure. This is a huge warning sign that this stock is getting ready to reverse. And so on that Monday night, I told all my subscribers, I say, hey guys, if you want to buy Apple, now will be the time to look into Apple and buying Apple. Okay. What does this vulture gap and the buying pressure kind of tell us? It shows that Apple has a strong signal of a bullish reversal. Okay. These multiple indicators, which is the vulture gap as well as the buying pressure, suggest that the stock is poised for a rally. Okay, this recent gap down signals that the end of a bearish trend, and it's coincident with strong support levels, which is what a buying pressure does, and that should stabilize the price. So us knowing that this downtrend has come to an end because that gap there was an exhaustion gap, right? And we call it vulture because if you think about it, vultures, they say vultures have a way of knowing when an animal is about to die. And so they start circling in the air. And I thought about it and said, you know what? Vultures are one of the very few animals that would actually have a feast with a dead carcass. Okay. Most animals will walk away from a carcass. Vultures see it as an opportunity to pounce on it. And I said, when markets are dropping, most people were like, I don't know if I should be buying this. But a vulture will come and is like, yes. But the key is making sure we're not just buying everything that's dropping, because if we were to decide to start buying when it dropped over here and we dropped over here and it dropped over here, we would have been losing more money. But the key is to understand, hey, wait a second, when this happens, hey, it's almost like the vulture is seeing an animal that's about to die, right? And it's okay, let me just circle in the air because getting ready very soon, this is going to die, it is going to turn around, and it'll be time for me to go feast on this stock, okay? So when we saw this on Monday, last week Monday, I said, hey guys, this is a stock that's about to pass out. The downtrend is coming to an end. We're getting ready for a reversal. Prices are beginning to stabilize. How did you know, Wally? Not because of any major news, but because I could see the candlestick signals, okay? Right after that, the very next day, guess what shows up? A bottoms up candlestick signal. I was like, oh, that's it. We're done. And for those of you guys who like looking at other, Western patterns, all this is happening in demand zones, which is creating support. Okay. But without even worrying about demand zones and all that stuff, me just seeing this information right here lets me know, hey, the bearish trend is over. There's no more bearish trend for Apple, at least on this time frame. This is a stock that is going to reverse, pure and simple. Okay. And so now it's just a matter of like, now let's prepare. And this is why we call ourselves right side trading, because again, we have to start anticipating what's going to happen on the right side of the chart. 2 days later, we get this. New candlestick signal suggests that a breakout above the previous swing high can be expected. Candlestick formations are confirming the strength of this upward momentum. This tells me, based on what we're seeing here, that Apple has the potential, very strong potential, to not just rally, but go back above 260. That's the power of understanding what candlesticks are telling you. Okay. So now it's just a matter of sitting back and let's see what happened. Where is Apple today? Let's see. Give me a second. This is all happening. And by the way, this is the same thing that you saw over here when we were talking about the S&P 500. You go here to Apple. Am I surprised to see a huge move on Apple today? No. Now, here's the interesting thing. People might say, oh, no, Apple only moved. You got lucky, Wally, because Apple only moved because of what happened to NVIDIA. Or Apple only moved because of what's happened to AI. Or Apple only moved because of what's happening to DeepSeek. I'm not disagreeing that. But I thought it was very interesting that, again, I never heard of DeepSeek until yesterday. But it's very interesting that last week, Monday, I knew Apple was about to reverse. Not that I hoped Apple was about to reverse, not that I guessed that Apple was about to reverse, but I knew that Apple was going to reverse simply because I could read the data. Ladies and gentlemen, this is what I mean by decoding the market by understanding how to read candlestick signals. Does that make sense? So, was my expectation? In due time, Apple should make it up to here. Not because I have a hunch, not because I'm guessing, but because I can see data that suggests this is what typically happens. We have earnings coming up very soon. Who knows? Maybe the earnings is what's going to propel it to that new high. Okay. But at the end of the day, remember what I said earlier. I said, whenever a stock drops, with the exception of earnings, especially if it's on the major index, if a stock drops like the S&P 500 did, back here to the S&P 500 with no warning, then chances are it's going to make a recovery. And that's the power of understanding what these candlesticks can do. So here's my write-up on this. Israel is asking, does this always happen or are there exceptions? Obviously, there are exceptions, okay? And again, part of those exceptions, Israel, is, again, let's say something like this happens because of earnings. So earnings could easily derail anything, okay? The Fed announcement could easily, I always say those are joker cards. Does that make sense? But what you'll find, and this is why I love higher time frames, is that what you'll find is, let's say the Fed announcement comes out or CPI report comes out, whatever it might be, that causes it. Again, you would already see the warning signs that the stock is struggling, okay? But if it doesn't, and then all of a sudden, Fed announcement comes out and boom, what? The stock was supposed to go higher. Now it's coming back down. What's going on? If you give it enough time, it will recover. That's the problem with most people who are not able to give it enough time. And that's why when Daniel was speaking earlier, I said, man, I 100% agree with him. If I was on a 5-minute time frame, I might not have enough time to recover, right? If I was on a 1-hour time frame, I might not have enough time to recover, okay? Because again, those news would affect the smaller time frame much, much more significantly than it would affect the bigger time frames. But if I was on a daily chart, weekly time frame, I just tell myself, okay, there was no warning sign. This just so happened to happen. Okay, yeah, just give it time. It'll bounce back. Give it time. It'll bounce back because there was no warning sign. And that's the beauty of this, Israel. Like, again, when I say candlesticks can really decode in the market, that's what it does. Does that make sense? And then what I encourage people to do is like once you understand how to use all these candlesticks, like literally, you can just go in there and say, okay, what are the major candlesticks I see here? Get those candlesticks, right? And then based on how I interpret these, you just come up with your own narrative with it. You know what a bottoms up does and what it doesn't do. You know all the goods and the bads about it. You know what a buying pressure does and what it doesn't do. And then once you understand all 7 of these candlesticks, you can literally come up with your own narrative, just like I wrote right here. You read this, and it seems like somebody on CNBC wrote this, or somebody on MarketWatch wrote this. But no, it's just me. And everything was simply based on candlestick signals, not because I knew anything about what was going on. Fair enough. Let me show you one last one, and then we'll call it a day. January 14th. Okay. January 14th, notice what I wrote up here. This is again on my social media page. It said warning signs are emerging among top S&P 500 stocks. So I started writing about all that. Notice what I said here. NVIDIA, a semiconductor juggernaut, and Tesla, a bellwether for the electric vehicle market, have shown clear instances where sellers have decisively overpowered the buyers. Okay? What do I mean by that? Hey, something is not right. Something is not right. Something is going on. And even over here, it said these warning signs are not yet visible on the S&P 500 per se, but they are making waves among some of the top 20 stocks. Okay. Now, historically, the S&P 500 is a barometer for market sentiment. As of now, the index itself does not show any signs of distress, often associated with a looming recession. However, on closer examination, it reveals a different story with some of the top constituencies. NVIDIA is showing huge warning signs. What do I mean by that? This is what we saw on NVIDIA. Okay. Now, I'm not going to go into all the details about this, but you see this right here, this period of time right here, all this is the opposite of a buying pressure. All that is opposite of buying pressure. And this was happening on the bigger time frame. It's like, and if you look at this, this is 1 month, 2 months, 3 months, 4 months, 5 months, 6 months, 7 months. For 7 straight months, NVIDIA was struggling to go higher. If you understand what a buying pressure is and how it establishes a strong support, a selling pressure does the exact opposite, meaning that price should not close above that level. So 7 months ago, when this happened, it was telling us, do not expect NVIDIA to close above that level. Now, it crossed above, but it came right back down again. It could not close above that level. That's what we mean by strong support levels. Now, in this case, strong resistance level. Okay, so on January 14, I was like, hey, you guys might want to pay attention. Anybody who's in NVIDIA, and even on our Monday night calls, it's like, if you're NVIDIA, you might want to consider not being involved in NVIDIA. Tighten up your stops, do whatever you got to take. So now, all of a sudden, yesterday comes, and I'm hearing for the very first time in my life something called DeepSeek. Now, granted, I don't pay attention to the news that much, so maybe that's why I missed it. But the fact that NVIDIA dropped was not surprising to me. Does that make sense? It wasn't surprising to me because it's almost as if whoever knew about this DeepSeek that was taking place yesterday or that was announced yesterday, maybe some people were actually aware of this 7 months ago. Could it be that they were aware of this 7 months ago and that's why NVIDIA struggled to keep on going higher? Okay. And so now when NVIDIA then goes through what it goes through, I'm saying to myself, it's nothing new. Warnings would have told us, and this is why I had that right there. I said, warning signs emerging. This was January 14. Warning signs emerging on some of the top S&P 500 stocks. Does that make sense? So I share that with you guys with the hopes that, again, it's not rocket science. I kid you not. I learned this. Anybody can learn this. The key is to learn the right information because there's tons of information out there that is misguiding people, sending people down the wrong path, and all that kind of stuff, to the point that what ends up happening is because they're not getting the right information, what ends up happening is then is, oh, it doesn't work. I've heard that many, many times. It doesn't work. Candlestick doesn't work. And that's whenever I hear anybody say candlestick doesn't work, it's usually because in my head, I'm like, you haven't got the right information. You will not be saying candlestick doesn't work. It's the reason why we've been able to pick tops and bottoms over and over and over every single month, every single quarter since 2016. Not because we had a lucky run, not because we had a lucky guess. It's because we understand how to read the data. So here's what I like to do for you guys. You can come join us every Monday night, you know, for as little as $30. That's the promo that we have. And so if you go to this link right here, rightsidetrading.com/promo, you come try it out for 30 days for $30. If you want to try it out for 60 days, you pay $60. If you want to try it out for 90 days, pay $90. This is a one-time offer. It's like, just come see what we have going on. Thank you, David, for posting that on there. So click on that link that David just put up on the site. All right. Come in there. And you'll see what we do live, and like yesterday, like I told people, I said, don't panic about this market dropping. All right. This market is going to rebound. I said, look, even if the market is going to go into this bearish mood that everybody, which, by the way, let me just say this, and I'm sorry that I'm digressing a little bit. When I woke up yesterday morning, like around 5 o'clock, 5:30, and I saw the market had dropped big. And I said, well, what's causing, like, I wasn't expecting that to drop, right? So when I saw it, I said, that's odd. And it was like, if the market was down on the S&P 500, like 20 points, even 30 points, I wouldn't have thought anything of it. But when I saw it, it was down 140 points. I was like, whoa, that's huge. That's unusual. So that prompted me to say, let me go find out what's going on because this is unusual, right? So I go in there and guess what I saw? It said Donald Trump was imposing tariffs on Colombia. And that's the reason why the market dropped. And I was like, oh, okay, that makes sense. All right. I said, well, you know what? Let me look at the chart. There was no warning signs on the chart. No worries, it's going to bounce back. The question is it going to bounce back in a day or within a week? But the point is, it's going to bounce back simply because there was no bearish candlestick signals that told us that it was going to come down. That's okay, no problem. Later on that evening, I said, well, let me see if it's rebounded back. Come back, and then that's when I first heard about DeepSeek. I'm like, what is DeepSeek? And it's like, NVIDIA is causing the market to drop down because of DeepSeek. I was like, what is this DeepSeek? Didn't know anything about it. I waited till like my meeting at 8 o'clock. When I meet with my people, I said, my people, they look at news more than I do. They'll tell me what's really going on. And so that's when they told me, they say, yeah, it's something with the artificial intelligence, blah, blah, blah. And I said, that's kind of interesting because in the morning, they said it was Donald Trump. By afternoon, they said it's DeepSeek. Which one is it? Right? This is another reason why I personally don't like to trust, the media. And I'm not saying anything bad about it, but I prefer to trust my indicators. I said, okay, well, after all that is done, some people's like, oh my goodness, it's going to keep on going down. I say, well, let me see. What's the indicators what's the candlesticks telling me? Well, no candlestick signals. Well, it's going to bounce back. All right, so then just give it time. It'll bounce back. Okay. Marcia is asking if you cannot make the 7 o'clock. It's actually 8 o'clock at night, 8 o'clock Eastern time. Yes, but there are recordings available. So we record every single session. So in the event that you cannot make it at 8 o'clock Eastern time, then yes, you should be able to get the recording. Okay. But for $30, that's like what, $1 a day. Come learn and see how to read the market just using candlesticks. I mean, this is something that, in my opinion, once you understand this, nobody can take that away from you. Now, it got to a point where initially when I first started doing this, I was like, okay, let me follow my rules. Let me follow my rules. And when I first started, I was still listening to, I preferred listening to what the media had to say. And there were times like, okay, yeah, this time it's not going to work. I'm going to trust what the media says. And then later on, I was like, snap, I should have stuck with my rules. I should have stuck with my candlestick signals. And then it just got to a point where I just made it a rule. Do not look at the media. And anybody who follows me knows, don't text me about what's going on in the market. I don't want to know because it gives me a bias that makes my judgment biased. I want to see what the candlestick indicators are telling me. Okay. And that's what it comes down to. Okay. Sanji saying, what's the price after the promo? If you were can I use TradingView? You can use TradingView because, you can use TradingView, but the price after that is $97 a month. If you want to, stay with us, it's $97 a month. But I knocked it down to $30 for 30 days. Pay $90 right now, you get it for 3 months, and then after your trial period is over, if you still decide to keep it, then you just pay $97 a month and you get to stay in. Does that make sense, Sanji? All right. But I hope that this helps you see that you can learn how to manage your stocks. You can learn how to navigate. You can decode what's going on in the market. Okay. Yes. So again, whenever we're doing, Sanji's asking, doing the webinars where you show potential buy points. Yes, and it's just like we did with Apple, just like we did with, the market itself. You'll see me. I mean, I was telling people when the market, the S&P, was showing us that buying, that bottoms up. I told them, I said, this is a time, and please don't take offense to this. It's just a joke. I said, this is the time you go pawn your children to the pawn shop because you want to get as much money as you can get because this market is guaranteed to go higher. Okay. So after about a week or two, go back and get your kids. But now you're coming back with a lot of money and give them some candy and they'll be happy that you pawned them off. Right. Now I'm joking. Okay. I don't want anybody, judging me for that statement. The point I was trying to stress, Sanji, is that you can see it. And so when I was telling people, I said, for this week, do not sit on the sideline. I said, nobody should be sitting on the sideline. This is where you go in and buy. And so then people started coming, hey, what do you think about this stock? And so we start analyzing it live there. And so, okay, here's a good stock to buy. Here's my reason why I will hold off on buying this, blah, 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 blah. Okay. And then you do it. Do you install it? You don't install it. It's just learning how to read it. You don't, it's not something that you install. Okay. Candlesticks is not necessarily something that you install. It's just learning how to read it. Does that make sense? So that when you see it, now if you're talking about running a scan, so you can find scans for it, I don't use TradingView, but then you would just have to figure out how to run scans on that. But the idea behind that is you have to learn. It's almost like learning how to read a language. Does that make sense? And so if somebody knows how to read English and somebody knows how to read Spanish, I don't know how to read Spanish, but a person who knows how to read Spanish can see it and say, I know what it's saying. It's as simple as that, right? Somebody who reads French says, I know what it's saying in French, right? It has to be written in English for me to understand it. But the point is, once we see it, we know what's going on. And that's my thing. Nobody should be guessing when it comes to the market. You should be able to read and decode what the market is doing. Israel is asking, what assets do you usually trade? I trade stocks predominantly. That's really what I trade. I might dabble in some options here and there, but quite frankly, stocks are my thing. But you can use it in Forex and you can use it in futures too as well. Okay. The biggest thing though is for me is stocks. I just love stocks. I've been trading stocks for years, and so that's what I do. Okay. But again, rightsitetrading.com/promo, guys. I mean, go on there, come join us. If you like, look, I don't know about this Wally guy, but I tried him out for 30 days. It's $1 a day. Come learn. All right. If you would, hey, I want to take advantage, I'll pay the $90 so that way I can be there for the next 3 months and then come and see. Because like I said, we pick tops and bottoms every single day. Sanji saying, if after I pay, would I have to wait for the next Monday? That is yes. But what I'll do is I'll send you the recording. So, now that you brought that up, anybody who signs up today, because we just did it yesterday. So I'll have the recording from yesterday sent over to you.